Super Investors portfolio changes were published just a few days ago. Now, of course, I went to have a look at Warren Buffett's portfolio, the Berkshire Hathaway, and I found that he has bought into a new position at ULTA Beauty. He bought about 690,000 shares for over $250 million, and as Warren Buffett is of course a value investor, I do believe that ULTA Beauty is currently undervalued. But to figure this out with certainty, we'll jump over to our fully automatic stock valuation spreadsheets, where we'll not only find ULTA Beauty's intrinsic value using our valuation models, but we will also evaluate its historical values and growth, which is fundamental when considering buying a company. Now, of course, if you do enjoy these spreadsheets, make sure to download them at my Patreon in the link in the description. Now, we will start the evaluation by plugging in the ULTA Beauty sticker ULTA and pressing enter, and wait for all the metrics to show up. Now, from the first glance, we can see that ULTA Beauty's income has risen by quite a bit over the past year. Its sales are up by 3.5% from 2.6 billion last year to 2.7 billion this year, though the company's earnings per share fell from $6.88 to $6.47 this year, which is quite a big change. Though if we do scroll a bit down, we can see that ULTA is currently trading very cheap, with its forward 1-year price to earnings multiple sitting under 14. And so I do expect that when we value the company using our grams formula, we will get an intrinsic value quite higher than the current trading price. Now, jumping back to our stock screener, we can see that ULTA Beauty is indeed not a dividend stock. They currently don't pay out any dividends. If we look to the left bottom, we can see that they are actually about to report their earnings on August 29th. And we can also see that the analysts predict a price of almost $500 within a year, which would be about $140 higher than the current trading price. Now, jumping to our 9-pair analysis, the first thing we can see is that the 5-year PE ratio is sitting at 32.96, which would mean that the company is currently quite expensive. But if we scroll a tiny bit down to the graphs, we can see that ULTA has actually been bringing their PE ratio down rapidly over the past 5 years, sitting at only 14.41 in 2023, which would hint towards the company being undervalued. Now, scrolling back up, we can see that ULTA has been growing their revenue, they have been growing their free cash flow as well as their net income over the past 5 years very well. Their 5-year profit margin is also sitting quite high, and they have been buying back shares, which I do love when a company does, as it means that I will own a larger percentage of that company into the long term. Now, something I also very much like about ULTA Beauty is their very low debt. Their long-term liabilities over the 5-year free cash flow, negative dividends. Of course, they don't pay any dividends, so in this case, the dividends are cut out from this equation. But overall, this metric is sitting at only 0.39, which means that the company can pay off all their long-term liabilities in about 2 years. Now, scrolling down to the graph so we can visualize everything better, we can see that ULTA Beauty's profit margin has actually been growing slightly over the past 5 years, so that is looking very nice. Their net income has grown from 705 million to 1.2 billion in 2023. Their revenue has grown by quite a bit as well, and their free cash flow is rising as well. And as we can see, scrolling further down in our sheets, they've actually been lowering their long-term liabilities, which I do love when a company does. Doing this well, the company might start paying out dividends quite soon. Now, scrolling all the way down, their earnings per share is rising rapidly, as well as their free cash flow per share. But now let's try calculating ULTA's intrinsic value. So we'll jump over to our grams formula, and we'll take the earnings per share, the base PE, the 5-year growth estimate predicted by analysts, the growth rate multiplier, the average yield on A corporation bonds, and the current yield on A corporation bonds. We'll multiply the earnings per share with the base PE, adding the growth rate multiplier and multiplying by the average yield on A corporation bonds, and then we will divide everything by the current yield on A corporation bonds. And we'll get an intrinsic value of $557.03, which, as I predicted, is a lot higher than the current trading price by 34%. Now let's move to our second valuation model, which is the discounted cash flow model. And here we will look at the free cash flow growth over the past few years and calculate the average growth rate to be sitting at 9.40%. Now, the analysts do predict a growth rate into the future of almost 6%, and as I like to be conservative, I will predict a growth of 6.2% myself. Now, using that, I will calculate the future free cash flow, and then plugging in a discount rate at 8%, I will calculate the present value of that future free cash flow, and summing all of that up, adding cash and cash equivalents, subtracting debt, I will get an equity value which I will divide by the shares outstanding and get an intrinsic value of again $501.37, quite higher than the current trading price. Now moving to our next valuation model, the multiples valuation model, where I compare ULTA to its peers, so GPS, SBH, and WSM. I will take these companies' current stock prices and divide by their earnings per share to get their PE ratios, which I will average out and multiply by the earnings per share of ULTA Beauty to get an intrinsic value of only $338.22, which is lower than the current trading price. Now, this hints towards that ULTA might be overvalued compared to its peers, and although its discounted cash flow model and the Grams formula hinted otherwise, it seems that compared to its sector, ULTA Beauty would be trading either overvalued or at a fair price. Now, as ULTA Beauty doesn't pay out any dividends, we'll skip our dividend discount model and jump straight to our ultimate valuation, where we will average out the three valuations we just did and get an intrinsic value of $465.54, which is 26.15% higher than the current trading price. So if I do want to be very safe, I can plug in a margin of safety of 20%, and I would still get an acceptable buy price at $372.43, which is slightly higher than the current trading price. Now, of course, Warren Buffett buying this company doesn't mean that you should buy it too. This new position in Warren Buffett's portfolio makes only about 0.1% of his entire portfolio. And so if you do really want to buy this company, make sure to do all the research in the back end before making the purchase. Now, if you did enjoy the video, make sure to let me know down in the comments which company you'd like me to evaluate next. Make sure to leave a like, make sure to subscribe as it really helps me out, and check out my Patreon to download these awesome sheets.